Good morning, everybody. Orlando here. How are you? I hope everybody had a great weekend. And yeah, let's start by looking at the markets that I trade. I'm going to give you my levels, what I'm looking for, possible plays that could, in fact, play out at the open. So I'm going to look at the markets that I do trade, actively trade, which are three: gold, the US dollar, Japanese yen, and the S&P 500. So I'm going to start with gold, right? I'm going to start with gold. This is gold on the daily, guys. After all-time highs, we have seen some very strong bullish momentum right here. And this is quite interesting what happened last week. So what happened last week is that or gold actually closed a daily bar below this week low. Now that could have signaled continuation to the downside, but the immediate next bar was a bullish bar that practically engulfed the previous bearish bar. So that signals rejection, right? Technically speaking, I'm going to place a line here, but because this is a very strong level that we saw a heavy battle between buyers and sellers, right? Buyers taking control immediately on Thursday. This was Wednesday, Thursday, and the last bar Friday. So on the daily, that is the level, right? Let's go to the 4 hour chart, and we're going to go down again. So as you can see here, we have that good bearish close below that level, then a consolidation. Here's the battle that I was telling you about. That consolidation is not a low volume consolidation. In fact, there was some heavy volume traded at this level. I saw it, right? And sellers were unable to push price down, right? They were absorbed by passive buyers here. That means that, on the order flow, you could see here a wall, a very big wall of buy orders that sellers were unable to fill, practically giving up and then buyers to control. This is, again, what I trade called price failure, and here sellers getting absorbed, right? So very strong momentum to the downside, sellers unable to break through that buy order wall, and buyers taking control of this with a massive 4 hour candle. So this candle involved the past, day of trading. So very strong bullish momentum, right? And then, of course, the consolidation after the move. So this consolidation is what I am looking for on for Friday for the open. This is the hourly chart, right? We already know that this is the level that sellers couldn't break through, and the price faked out from. So for me, the levels that I would be interested in are this. This range, after the move right here, this is the consolidation range that I'm looking at. Very interesting, guys. Why? Because we could see some very interesting stuff playing out like this. I see four possible scenarios, and I'm gonna walk you through those four possible scenarios. Right? To me, it really doesn't matter how strong this bullish momentum is, or how bearish the market has been. Right? I don't trade with a bias per se. What I trade are price failures. So it doesn't matter to me if we are in a very strong bullish move. I will trade price failure from the highs to the downside. So let's go to the 15-minute chart, and let's have a look at this range right here. So this is the range, right? After the move, this is quite a big range. We're talking about 700 pip range. So that could, in fact, give us a very big room to possibly capitalize on this trade. So four possible scenarios. First one, uh, let's assume that we don't open with a gap up or down, and we open right around the same levels. The first scenario would be buyers stepping in at the open and just pushing price above this level, above the ranger's high. This is the ranger's low, right? what I would want to see is the same thing that happened here. I would want to see a very strong struggle between buyers and sellers, and buyers unable to break above, what would be a wall of sell orders, right? And buyers giving up on the breakout. So this is bullish momentum on the right side, on the left side. When buyers give up, that we have a momentum shift to sellers taking control, which gives me that price failure or that price failure and short opportunity that I would be looking for. The target would be these lows, or the last lows that price printed on Friday. Ultimate target would be the ranger's lows right here. So this could in fact give us a 500 pip move to the ultimate target, and a 250 pip move to the last lows right here. That's the first scenario. Second scenario, same thing. If buyers jump in at the open and take control of this market and really break above these highs, and we see a clear momentum, bullish momentum, what I would want to do or see, not chasing this breakout, that is ill advised. I would want to see price coming back towards those highs, right? Retest those highs for further upside. Now, this is the scenario that I least like, and I'm going to tell you why, right? And the reason are these highs right here. This is a very important level, and I'm going to show you why. I'm going to put a line here first, and I'm going to show you why. Historically speaking, you have to look at what has happened before, and how price has reacted to those levels before. So as you can see here, this level was a very strong support level. We saw buyers protect that level. Then price broke with those lows, and sellers took control, right? We see a clean break here. Then coming back to the 50-minute chart, right? This is the level where buyers were protecting, and then we saw that break. This is the break, and then we saw a retest of that level right here, where sellers were stepping in to push price down even further to the ultimate low right here. So historically speaking, we can see that this has been a very strong pivotal level, which in fact is would be a level that you should do something about your trade at. Wishful thinking does not work. So if buyers really break with the ranges highs and come back down to retest those highs and then move up again, and price moves up again, the range that I could in fact play is quite small, and it wouldn't even give me a one-to-one risk to reward ratio for possible trade. So that's the reason that the second scenario, the bullish scenario on a break, is not my preferred scenario, right? But again, what I would want to see if I were to trade the upside on Monday, I would want to see buyers break with the ranges highs, coming back to retest those highs, then taking control again and breaking with that key pivotal level. And then here is where I would look for longs at the second resistance level, which is the 42.74 level, which are this highs right here, and historically this lows right here. And why? Because if buyers are able to do that and take control of this market, our ultimate targets would be these highs or this zone right here. And that in fact give me enough room to take a trade right here. So this breakout, I would not chase, but if I see buyers really take control, this is the zone that I would look for longs around the 42.74 level because of how wide that range is or how big that possible move is, which is about 700 pips versus 180 pips on the low side. So that's a very good possible scenario. Now, scenario number three is short longs again, but if at the open, scenario one and two is if at the open buyers, jump in and start taking control of the market. The third and fourth scenario is if sellers start to jump in at the open and attack this lows, the range's lows. So first scenario would be again price falling from these lows, sellers actively trying to break with the lows, unable to break with a buy order. Our place here, giving up and an immediate shift in momentum from sellers to buyers, giving me that price failure that I would in fact love to take to the upside. So first target would be the structure low right here. Alternate target would be the ranger's highs, right? That gives me enough room to have a decent risk to reward ratio of about 1.5 to first targets and about a 2.8 to second target. And the last scenario would be a clean break to the downside. Again, if at the open we see sellers take control of the market and break below that level and retest that level, I would love to take some shorts towards this possible range right here. So moving that line to this high, that would in fact be a nice 500 pip move to the downside if that scenario takes place. Remember that this is assuming that we do not open with any gaps, eliminating all of these levels. Because if we do, I would not consider any of those scenarios tradable anymore. For example, if we open all the way here, I'm not going to chase a move down for further upside. And if we open all the way down here, I'm not going to chase anything at all, right? For my setups to play out, gold has to open inside of this range, which is the lows and the highs. The lows at the 41.70 and the highs at the 42.46 level. So that's gold. Let's have a look at the US dollar, Japanese yen. All right. Now, this is a very, very, very lovely market that I trade. This is quite interesting because the US dollar, Japanese yen is at an extreme high level, right? That means that the Japanese yen is at an extreme low against the US dollar. Remember that if the US dollar Japanese yen moves up, the Japanese yen is actually depreciating against the US dollar. And historically speaking, this is the daily chart. This is the daily chart. You can see, I'm going to zoom out so you can see, historically speaking, this is a very, very strong historical level. You can see here, this is 2024, June 2024, where we saw this massive, massive liquidation to the downside. Now, at these levels, what's interesting is that we do see intervention from the Bank of Japan, actively buying yens in the market to keep price to keep the yen from depreciating even further. So that brings very, very good opportunities to the downside, and that is exactly what I trade or have been trading for the past months or so. On the hourly chart, on the hourly chart. Let's go to a 50-minute chart because it's going to be very, very fast. As you can see here, it's very tough to trade the US dollar, Japanese yen at these levels in the sense that it creates a very, very choppy range. But when price breaks below that range, this is where the opportunities come to trade the downside. This is a trade that I took on Friday. You can see here, price just strongly closing below that range and then just moving down. So having said that, the levels that I would be looking for are this high and this low is those extreme levels. Go to the 5-minute chart, right? And those are the levels that I am interested in. So basically, this high is really not important to me, and this range is low would not be important to me, right? I would want to see price come to these levels if I were to do something about it. And I would only trade the downside. And this is the Possible setup that I would love to see price opening inside of the range. Again, I need price to open inside of the range. If we open with a gap outside of the range, I'm not trading. So if we open inside of the range and buyers jump in and break with these highs, I would want to see buyers unable to break with that wall of sell orders, right? Giving up, shifting the momentum from buying to selling. Sellers take control, giving me that price failure that I trade for further downside. The cool thing about price failures and that momentum shift is that when buyers give up and momentum turns from bullish to bearish very fast, we are not going to see buyers trying to pick price up at this level. So the momentum shift brings very strong moves and very fast moves like this one right here, or the ones that I trade on Friday, right? So this is what I would want to see. That would give me, remember, this is the US dollar Japanese yen. So we have a 40 pip range. And this opportunity would in fact be enough for me to have a 1 to 1.2 risk to reward ratio to the downside. Now, if at the open we see buyers, we see sellers take control of the market, I would not trade a price failure from the ranger's lows to the upside. When it comes to the US dollar Japanese yen, I am only interested in sales just because of how good the momentum to the downside is. Just to have a look at how choppy price action is to the upside versus how clean and fast those bearish moves are on this market. So I would not be trading the upside in this market. The only trade that I would take would be price falling from the 160.40 level, 160.37 level. So that is, my friends, the US dollar Japanese yen. I'm going to finish up this with the S&P 500. The S&P 500, quite interesting. After all-time highs, after that super enormous grind to the upside, hitting all-time highs, you can see by those 4-hour candles, those bodies are extremely big against what you can see on the bullish side of things, right? So if we zoom in a little bit, those bearish bars are very strong, right? Compared to the grind to the upside, which are mainly just pullbacks, right? Um, and that is very interesting to me. So on the, let's go to the hourly chart just to see some levels. Yeah, as you can see, I'm taking shorts here on the S&P 500 on Friday. So here is the cool thing about this. This is the last high that printed on Friday and the low that printed on New York. So this is New York high, this is New York low. So what I would love to see is price falling from either level. So what I'm going to do, I'm going to grab this line and I'm going to put it here. I'm going to go to the 50-minute chart, maybe the 5-minute chart. Let's see about that 5-minute. No, the 50-minute chart, so we can actually see what's going on. So this is New York highs, this is New York lows, right? And this is the range that I would want to trade. And given the fact that we closed near New York session highs, I would love to see at the open price opening and failing to break above that highs. More importantly, what I like about this is that historic level. If we go back to the hourly, again, here is where sellers have completely and utterly eliminated any buy momentum. So that level, this level is super strong, right? This is super strong. So again, 50-minute chart, I would want to see price open inside of the range. If price doesn't open inside of the range, I'm not doing anything. Price opening inside of the range, buyers actively taking control at the open, failing to break with that wall, right? Giving up and the buying momentum shifting immediately to selling momentum, right? Sellers taking control of the market like this. Now that gives me confirmation of price failing, and I would target these lows again, like I did on Friday. Actually, I target these lows on Friday, but it's the same thing, right? And this is interesting because the range here is about 80, 87, 870 pips, let's call it, with, possible, so a possible 1 to 2 risk to reward ratio on this short. Now, the reason that I would not play uh, the longs is because of how close we close from New York session highs. So, in fact, if at the open we open inside of the range and sellers take control, this is a big enough move to understand that price, breaking and continuing is of much higher probability than price failing from these levels. And in fact, if I see this happening and I see something like this, I would not take it. If I see that shift in momentum, I would not take it just because of how strong sellers would have to be to bring price down here. So that in fact would be just a pullback for further downside. So no, I'm not playing the bullish side in this scenario on price failing. Um, if in fact we see a breakout, I'm not interested. But on the short side, if we see a breakout retest, I am definitely interested in further downside towards this level, this lows right here, giving me a very nice 1 to 2 risk to reward ratio or something like that. So this is what I'm looking at. Remember, if we fail to open inside of the ranges, I will do nothing. Trade safe. I wish everybody a good trading week.